This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just opened.
I'm Haidi, Stroud-Watts. The top stories this hour. A cautious open ahead for Asian stocks as the S&P 500 heads for its worst quarter since 2023 amid trade war volatility. The bond market flashing inflation concerns ahead of the Fed's preferred price gauge.
Cost of living set to dominate Australia's election campaign. Prime Minister Anthony Albanese calling the national vote. It'll be on May the 3rd.
Also ahead of Bloomberg Scoop, a draft document reveals the US is seeking to control investment deals in Ukraine, squeezing out Europe.
And we are live at Hong Kong's shiny new showpiece, the Kai Tak Stadium, as the city's iconic Rugby Sevens tournament kicks off.
Take a look at how we're kicking off this Friday session, looking pretty lackluster across the board. If that lead or lack of a lead that we got from Wall Street is anything to go by, we're seeing a tepid start to trading. Of course, it is a staggered open here in Australia, so we'll wait for a bit to get a proper read on that. But of course, it is the political agenda that's dominating news flow here. The Prime Minister, Anthony Albanese, calling that May 3rd election. The polls are showing a tight race on this election that really is, as we've seen across many other global elections, down to that cost of living crisis and that inflation debate and the inflation challenge there. Chicago Nikkei futures tipping up by about 0.2% there. We're looking quite directionless broadly as a region. We saw US shares declining on worries about the trade war, of course, as well as some of these mixed indicators when it comes to US economic growth. We're looking at contracts for Hong Kong a little bit later in the session, perhaps showing a little bit more positivity. Dollar yen, take a look at that though. 151 is where we're at, and we're getting to those levels where potentially we may see sort of some verbal commentary from FX regulators.
Let's take a look at our US futures tracking pretty flat at the moment after another day of, more modest selling that we saw after the auto tariffs announcement. Ford, General Motors among the car makers losing a bit of ground there, and this is of course before we even get the big tariffs announcement on April the 2nd. Fourth quarter GBP growth in the US did rise to 2.4%. We're now waiting on the Fed's preferred inflation gauge. If we take a look at the oil price, that's pretty flat at the moment, but big moves in gold amid all the uncertainty, hitting another record high there. Goldman Sachs is now ramping up its bullion forecast. It was at 3,100 an ounce by the end of the year. That's starting to look well in sight. 3,300 an ounce by year end is the new call from Goldman. Haidi.
Paul, of course, the big news this morning is that election being called for May 3rd by the Australian Prime Minister Anthony Albanese. It really kicks off a campaign that's expected to focus on that cost of living pressure issue for households, a housing crisis that continues to play out in what is a sluggish economy.
Our government has chosen to face global challenges the Australian way. Now, on the 3rd of May, you choose the way forward. Your vote has never been more important, and your choice has never been more clear. This election is a choice between Labor's plan to keep building or Peter Dutton's promise.
Our Australian government reporter Ben Westcott is in Canberra and he joins us now. All right, well, it's on. We're waiting. May the 3rd is the day. Who's best positioned to win at the moment? Polls have got it looking pretty close, and there could be a significant performance from independents as well. What are we looking at?
Yes, that's right. Finally, we're in the election campaign proper. And until very recently, we would have said that Peter Dutton was looking incredibly strong. The polls were moving his direction. But actually, since that Reserve Bank interest rate cut in February, we have seen a slight uptick for Albanese. And in a number of polls now, his centre-left Labor Party is ahead, about 51-49. Now, the government is pretty confident given those numbers. They believe that during most Australian election campaigns, votes swing towards the incumbent, and therefore they're feeling pretty chuffed. But there's no doubt that there is still a great deal of frustration about cost of living in the community, a great deal of anger that Peter Dutton will be tapping into in his campaign to make Anthony Albanese the first-term government to lose power in a century.
Ben, you mentioned we were talking about the Teals and how impactful they were in the last election. They expected to be this influential this time around. Will they be kingmakers?
I mean, they're, if anything, more important this term than they were last time. There's been this long-term trend in Australian politics towards having more of a minority vote rather than a vote for the two major parties. In the last election, it was about 1 in 3 votes that went to minor parties or independents, and there's no reason to expect it to change this time. We've seen similar results at state elections. Given that, and given the ever-creeping threat of minority government to the major parties, it's just quite possible that the Teal independents who get elected this time could end up deciding after May 3rd who becomes Australia's next Prime Minister, whether that's Anthony Albanese or Peter Dutton. So you can expect a lot of questions of them in the weeks ahead about who they would support, although I believe that they're all basically saying at this stage that's what the negotiations are for after May 3rd.
Well, we've had both the major parties unveiling their economic visions this week with the budget and the budget reply. Now, if there is a minority government, whatever flavour that is, what are those negotiations going to mean for the eventual cost of living relief?
Yeah, great question, Paul. I think in the majority, the independents are not terribly interested in the short-term fixes that the Albanese and Dutton parties have basically picked for their election campaigns. They're interested in far longer-term things. There's been a lot of talk about tax reform from some of the Teal independents. They want to see changes to get rid of bracket creep or make the housing market fairer by removing generous tax breaks for investors. All that would be supercharged under the Greens if they were to hold the balance of power. They want to see far more long-term structural assistance in the form of things like dental into Medicare. But then, if it comes down to just a couple of seats and Peter Dutton is looking in a prime position to form government, people like Daly or Bob Katter would probably be far more amiable to an idea of more shorter, soft-term cost of living assistance than the Teals or the Greens.
Australia Government reporter Ben Westcott there with the breaking news this morning with that election being called. Let's bring in Jill Sheppard now, who's a senior lecturer in politics at the Australian National University. Jill, great to have you with us. And I wanted to pick up that point that Ben made about sort of the sheer level of political fragmentation perhaps they're looking at, with Albanese trying to vie to become the first Australian leader in more than 2 decades to win consecutive elections. What's your view on this? How did we sort of get here, and how unhelpful is this in the longer term when it comes to actual structural changes and policy making?
Yeah, look, it has been decades in the making, this structural decline in the vote share of the two major parties. And the major parties have really shown no great willingness under our compulsory voting system to address this, because as long as voters are still turning out, then it doesn't matter whether they don't really like them. At the end of counting, that vote is going to end up with one of the major parties. What happened in 2022 was that a big bunch of independent candidates were much better resourced than ever. As Ben alluded to, they are even better resourced now and in a prime position to, if not take the balance of power, or at least really influence the narrative around this campaign, the kinds of issues that are talking about. And as he said, none of the major parties is talking about tax reform. They're arguing over very small changes in the percentage point income tax rate, but only the independents are talking about structural reform. And as long as they're around, that will change the kind of campaign that we're going to see.
In terms of the outlook, it's interesting. If you take, I guess, a global lead, we've obviously seen over the past year or so a lot of elections around the world swinging to conservative parties. At the same time, in the last few months, it seems like if you take a look at Canada, for example, there's been some strength being regained from Liberal parties post-Trump amidst this sort of threatened trade war. How do you think it's going to play out amongst the major parties here?
Well, I think we've seen Anthony Albanese's announcement this morning that he's trying to frame the Liberal Party as the Trump version of Australian politics. And whether that will stick with voters really remains to be seen, but they're certainly trying to tar Dutton with that brush. In terms of actual policies, effects of things like the tariffs, both the previous round and the round still to be announced, will probably affect some seats in this election. They're certainly not infiltrating the overarching narrative at the moment, and I think that's largely because both parties want to avoid saying the Trump word and are pretty risk averse in terms of looking too aligned with the Republicans.
Yeah, in terms of how that relationship gets managed, is it possible to see any difference between the two major parties? And again, we can't really ignore the potential influence of the Teal independents here, who may end up, as Haidi said, supporting one or other of the major parties to form government.
Yeah, the major parties are really trying to speak to a bunch of different constituencies here. And for instance, the Liberal Party is probably quite keen to talk about their ability to get on the phone with Trump and argue our case in any tariff war. But at the same time, they don't want to give any impression to the independents or to swinging voters that they are too close to Trump. I think what will happen as the campaign wears on is that the independents will push these issues more than the two major parties. But for the most part, they're going to talk about inflation and cost of living, which are effectively the same issue, just with a slightly different slant. And after 5 weeks, voters will be sick of hearing about it.
Jill, it feels like yesterday since Anthony Albanese won power. We've only got 3-year terms here in Australia. Does that make for kind of a timid policy agenda? Is it time for have a national conversation around 4-year terms, or is that political kryptonite?
Both major parties have come out in support of 4-year terms. Business sectors in Australia certainly want 4-year terms. There's no great evidence, for instance, if we look to the UK, that longer parliamentary cycles do lead to better economic outcomes. I think there is a sense of fatigue, particularly among voters who are forced to vote under compulsory voting and don't really like what they see in terms of the two major parties. But on the other hand, if a government becomes entrenched and they don't seem to be doing anything, then 4 years can feel like a long time too. So I think business and politicians maybe need to be careful what they wish for in that regard.
This election, and rightly so in so many ways, has been characterised as one being based on cost of living pressures and very much domestic issues like the ongoing housing affordability crisis. I do wonder, how much do regional issues come into this? Obviously, the pivot away from Asia that we're expecting from the Trump administration 2.0, the influence of China. Are these issues that voters ultimately care about?
Voters in, for instance, central Queensland or parts of WA that have been affected by Chinese import restrictions or the tariffs now, they absolutely care about it. The problem that the major parties face is that they don't really want to get into a proxy war with China during an election campaign. And while you are trying to speak to for instance, steel industries in these areas that are being affected by geopolitics. You also have marginal seat battlegrounds in Victoria and New South Wales with a lot of Chinese Australian voters, and that ability to walk both sides of the street, was much more possible in a pre-internet era. Now anything that a politician says in Gladstone, for instance, is going to make its way down to Western Sydney. And so what you see is just a complete retreat from that agenda at all. And this is a massive issue for Australian industrial sectors, but also for voters, and we're not going to see anything really about it in the next 5 weeks.
Jill, we can't, of course, let you go without a prediction. What does the next government look like in Australia? Are you willing to make that call?
I'll happily piggyback Ben here and say I think minority government looks like the likely outcome. There's no sign that this decline in major party support will rebound at this particular election. The major parties aren't doing anything that suggests they've recovered that support.
Jill, really great to have you with us this morning. Jill Sheppard, who's a senior lecturer in politics at the Australian National University. We do have some breaking news when it comes to the cloud computing provider CoreWeave, set to be pricing a $1.5 billion IPO at $40 per share. We had indicated this might have been the situation in terms of CoreWeave planning to cut down the size of its initial public offering to around that $1.5 billion price level. We're expecting investors will be offered about 37.5 million shares at around that $40 per share pricing. That was down from an initial plan of 49 million shares at between $47 and $55 each there. So this is a pretty highly anticipated listing, and perhaps it tells us how the stock market volatility, all of the uncertainty we're seeing across the corporate sector in the US is really starting to hurt demand there. Nvidia, of course, is an existing investor in CoreWeave, and they had planned to anchor that share sale with an order of about 250 million. Coming up on the Asia trade, we talk China's banking sector. Fitch ratings will be along with us. Market strategy is also something we'll be talking about with Barclays. We'll also be heading to Hong Kong's brand new Kai-Tak Stadium as the Rugby Sevens tournament kicks off. Much more ahead. This is Bloomberg.
the US is pushing to control all major future infrastructure and mineral investments in Ukraine. According to a draft partnership deal seen by Bloomberg, the Trump administration is demanding first claim on investments in infrastructure, clean energy and critical minerals, or just energy generally. Bloomberg's Michael Heath joins us here now. So, Michael, this sounds like a fairly ambitious agenda.
Yeah, it's one way of putting it, Paul. I mean, it's quite an extraordinary document, really, and you have to sort of question whether this potentially violates Ukraine's sovereignty, because having these sort of first calls on infrastructure projects makes it really questionable whether Ukraine could ever ascend to join the European Union, because all those sort of things need to be open. And the other issue too is that that the US will also have first call on the money coming in from this fund until it's been repaid for all the support it gave to Ukraine. So, I mean, it doesn't strike me as a very terribly fair deal, and not one that Ukraine would readily agree to. So there's behind-the-scenes negotiations, and President Zelensky said yesterday very clearly that Ukraine doesn't want to give any sense to the US that it's out of step with what the Americans want, but it's going to have to draw the line there, I think, because it doesn't want to be shutting the door on joining Europe. I mean, that's always a good driver for reform in these sort of candidate countries, and it's certainly, you know, the Trump administration, and it's so unpredictable that I don't think you want to be signing away that sort of sovereign decision to Washington right now.
In the meantime, we're seeing Europe continue to kind of see that fracturing, right, when it comes to how it wants to approach sanctions that are part of demands from Russia.
Yeah, I mean, well, this is, I mean, dare I say it, Europe's trump card. I mean, Russia wants sanctions removed, and basically it wants Europe's sanctions removed, because a lot of trade, well, most of Russia's trade is done with Europe, or it was, and obviously there's a lot of investment there. The elite in Russia, a lot of them have homes and spend a lot of their time in Europe as well. Before the war, so that's really crucial to them. But Europe understands that. They're actually talking about ratcheting up sanctions to encourage Russia to go along with this deal, and that's definitely the right strategy. I mean, you see so far there's been a lot of concessions made on Ukraine's part, and Russia's been dragging its heels in these negotiations and has basically conceded nothing as far as I can see at this stage. So Europe is sort of the honest broker there, and I think President Trump's going to find it quite frustrating if he wants to ease everything up on Russia without getting something solid in return, that Europe will be the good cop in that sense, or the bad cop, depending which side you come from.
Yeah. Bloomberg economy editor Michael Heath there. On my head on the Asia trade, this is Bloomberg.
It's inevitable that tariffs are going to increase inflation in the near term. And my kind of modal outlook would be that that could be short-lived, with a continuation of some disinflation, but further in the future than I might have expected before. But there are risks around that. And depending on how things unfold, it may be more persistent and a larger increase.
The economy has not been strong. Okay?
Right.
It has not been a balanced, good economy. It's been a very unbalanced economy. Strong government, okay? Strong services, because a lot of rich people are making money off the stock market. And then you have this AI capex sort of driver.
Right.
But beyond those three areas, I mean, please tell me, where is the strength in the U.S. economy? Where has it been?
That's Boston Fed President Susan Collins there, also Morgan Stanley Chief US Equity Strategist Mike Wilson.
Yeah, uncertainty is really the name of the game, isn't it, when it comes to expectations? And look, some of the data we had overnight, it was interesting because even though the eco data was broadly positive and pointing to resilience, the broader takeaway from investors is still what comes next as the impact of tariffs and everything else starts to wage its path through the economy. The data that we had, an expansion of 2.1% 5.4% annualized in the fourth quarter. Corporate profits also rising 5.9%. That was the most in over 2 years. So all of that was good news. But does that momentum and profitability continue, given we know that tariffs at that point, were not in place and probably not top of mind even as a threat, but now certainly are?
Yeah, and the data is going to start reflecting that more and more. I mean, next out of the blocks, PCE numbers for February. This is the Fed's preferred inflation gauge. So expecting that to hold mostly steady, although the core price index could show a little bit of acceleration. Now, that does fit with the Fed's recent commentary around inflation risk and stickiness of inflation. Bloomberg Economics has been doing some analysis of this, and they expect to see a rebound in personal spending. Consumption's okay, so this alleviates some of the growth concerns, but there's not really going to be any change of thinking here likely for the Fed. That wait-and-see approach probably going to persist for some time. Well, UBS Asia Pacific President Iqbal Khan sees stagflation as the biggest risk for investors. He spoke to us at the Bloomberg Family Office Summit in Hong Kong about why he's not expecting a recession in the US despite rising trade risks.
The biggest risk for everybody is to sort of like have this perspective of hope, right? I think everybody needs to focus on the fundamentals. Even if you look at the US economy, you mentioned there is a slowdown in growth. In a number of the fundamentals, you're not seeing that to the extent that you might read in the media. If you look at some of the portfolio companies,
it was the OECD that cut its growth projection. It wasn't the media.
Global growth projection. I'm not arguing with you around is global growth higher or lower. Also, the reduction was not that significant. The biggest question, if you think about risk, I don't think it's a risk question of how much growth we will have or not. It's stagflation. That's the real risk out there. And that's what everybody wants to avoid. And I think most of the central banks, including the Fed, is clearly very, very focused on that.
Do you see a recession in the U.S., given multiple tariffs that we're looking at, given the expectations of a trade war? Prior to the 25% tariffs on autos, there was a chance of, I think, 35 to 40% of a recession in the U.S. Summer says 50. How are you looking at the possibility of that happening?
Look, I think we're not seeing that as of right now. Have risks gone up in terms of having a slower economy? Yes. Equally, if we look at this whole, everybody keeps on coming back to the tariffs, right? I mean, most of these tariffs have actually been short-lived, with the exception of specific tariffs and the reciprocal tariff that's been announced. And let's see how long some of these more significant tariffs are going to actually prevail and exist. If you look at what happened earlier on this year around specific high-level tariffs, you saw them being taken away post-negotiations and conversations. At the end of the day, the question will be how do tariffs really impact the economy, and what level of tariffs impact the economy? If the objective globally, and I'm not specifying onto the U.S. administration, but globally is to actually have a world where you are at the same level playing field and the product makes the difference. If that is, and assuming that is the objective, but if that is really the objective, then this will be a transition period. And this transition period brings uncertainty. That uncertainty has an impact on volatility in markets.
UBS Asia Pacific President Iqbal Khan there, speaking with Bloomberg Insight anchor Haslinda Armin. Let's take a look at how it's shaping up when it comes to US futures. And it was really quite a struggle when it comes to the previous session. Of course, lots of concern over the ongoing uncertainty over the trade war, despite some pretty resilient US eco data with the fourth quarter numbers, the growth numbers coming in pretty strong on corporate profits too. As with that, it looks like that directionless trade continues in Asia and through to the Friday US session. We do have some breaking data just crossing the Bloomberg when it comes to Japan Tokyo CPI. Year on year, the headline number a little bit speedier than expected, 2.9% clip there. The survey was for 2.7%, but maintaining the same momentum that we saw in February as in March. Stripping up fresh food costs, we're seeing a gain of 2.4%, also higher than expectations, an acceleration from that 2.2% that we saw in the previous month. And taking out more volatile food as well as energy costs for March, we're seeing a gain of 2.2%, again comfortably above that 1.9% that economists had been expected, and showing further acceleration from the previous month of 1.9% there. So really it does suggest that we're going to continue seeing the same trajectory and the confidence from the Bank of Japan, given that we're showing that March core inflation continuing to show strength. What the implications are when it comes to dollar yen, we've seen that big move when it comes to the yen headed for its third weekly drop against a dollar. This is the longest losing streak since about middle of December. Bonds are also set to decline there as well. So this does kind of fit into the broader narrative for the Bank of Japan and that growing divergence that we see between the BOJ and other global central banks. Let's take a look at how we're tracking across the region, and we are seeing that sort of lack of conviction as we head into the Friday session here in Asia. In Australia, of course, we're looking at a few weeks of political campaigning with that election being called early this morning by Prime Minister Anthony Albanese. It is a cost of living crisis, sort of property crisis centred election there. Of course, we're seeing a little bit of risk aversion there in the Sydney session. Chicago Nikkei futures have now turned negative as well. All of this after we saw US shares declining on concerns of a widening trade war. You see that concern playing out in US futures at the moment there as well. So a lot of caution from these markets ahead of Trump's promise of reciprocal tariffs being announced on April 2nd, after, of course, Paul, those 25% tariffs on imports of cars into the country.
Yeah, on the subject of cars, let's take a look at how some of those US automakers performed in the last session. Generally speaking, not particularly well. We've got General Motors there off by more than 7%. A fair bit of weakness for Ford as well. Tesla, though, up 0.4%. It was doing better intraday, but did close higher. Tesla, of course, has more production in the US than those other car makers. 60 to 75% of its cars are domestically manufactured, although Elon Musk did say that Tesla is not unscathed. The cost impact won't be trivial because its panels, headlamps, etc., also made in Mexico. Well, we've been asking our guests how the new tariffs may impact the auto industry and commodity prices. Let's take a listen.
Well, one thing we know about the president is he changes his mind back. I mean, this is a negotiating tool.
The tariff comments have a very large impact to commodity prices.
He's saying clearly this is a critical industry. We can't be reliant on other sport. We have to make it in the U.S. So I think in the case of product tariffs, there aren't really going to be any exemptions, or there's no real negotiations either.
This is going to dramatically affect U.S. auto operations. And I know part of that is intended by the president, who wants assembly to be back in the U.S.
And it actually got enacted. It would be an Armageddon-like, I think, tariff, for the auto industry.
And of course, a major consideration here, Heidi, is what's going to be the impact of these tariffs on consumers, because you can't expect the auto manufacturers to eat all of the costs here. So it's possible, or likely, according to Bloomberg analysis, that some of these cheaper cars are going to be most effective. Cars under $30,000. There's 20 models at that price point or less in the United States. Those are made offshore. Lower costs, supply chain advantages. Of course, tariffs pretty much destroy that argument. And we've got the Stellantis chief worrying about the affordability of cars in the United States due to tariffs. And at the high end, well, it's Porsche and Mercedes going to be the worst hits. Bloomberg Intelligence seeing that tariffs could wipe out about a quarter of 2026 earnings there.
You mentioned Tesla earlier and how it is, why Elon Musk is saying that they won't be entirely unscathed, but they certainly look like net one of the beneficiaries of, they are expected to be less affected by these Trump tariffs. Domestic manufacturing operation in California and Texas, of course, being the major part of that, given that the tariffs will apply to all imported passenger vehicles and light trucks, including key parts there. So these large factories in California and Texas that churns out all the cars it sells in the US, really kind of gives Tesla that insulation to a greater degree on these new levies than some of its major rivals. And in fact, if you take a look at some of the biggest losers, it really will be the likes of Japan and South Korea's car makers. They account for about a third of the cars imported into the US, about 2/3 of those imported from outside North America. At the end of the day, you're sort of impacting the broader sort of emerging EV supply chain. So much of it is dominated by Beijing. So there is an argument that here, one of the biggest winners ultimately is going to be China. We are speaking on this topic, Paul. We're hearing from the Japanese finance minister at the moment.
Yeah, that's right. Minister Kato is saying it is very regrettable that the US has included Japan in auto tariffs. So we're just receiving that line out of Japan now. Perhaps an understatement, Haidi.
Very diplomatic there. We've also heard from the former US Commerce Secretary Wilbur saying that while the execution of President Trump's tariffs are a concern, they make sense if applied broadly. He spoke to us exclusively and said that some of the complications, and spoke about some of the complications when it comes to cross-border implementation.
If a Mercedes is bought in Germany, there's a VAT on it. And in most countries, it's around 25%. But those same countries rebate the VAT on export. So without tariffs on our side, a Mercedes would literally cost less in the U.S. than it does in Germany. Whereas in contrast, since we don't have a VAT or anything else that we can rebate on export, a car shipped from the U.S. pays the VAT. So an American car shipped to a VAT country costs more in that country than it does at home. So VAT is a component of the disparity.
Back to your first point about increasing manufacturing within the borders of the United States, critics of that strategy would say the volatility surrounding the tariff announcements is enough to disincentivize any sort of credibility that a long-term investment in the United States is a good idea. If the economics of tariffs work, do you think the execution of them is a concern?
Well, the execution is a concern. And to my mind, the simpler and more broadly based he makes them, the better.
Well, Secretary Ross, the way Donald Trump is also potentially addressing the deficit and some of the costs around the U.S. government has also been, in addition to tariff revenue, talking about reducing the federal workforce. You've seen DOGE as one example of pretty swift actions in reducing that workforce. Is there anything you would do differently in terms of perhaps the end goals that DOGE has?
Well, they know they have to act very quickly. And the reason is this: some of the measures probably will end up needing congressional approval. And by September of this year, all that the Congress will be focusing on will be the midterm elections. And that means they will be very unlikely after that period to do anything that's controversial. So part of the reason there's a great rush here is the political cycle relative to the congressional election. And that's why you're seeing him try to come very quickly with cuts. Now, going that fast undoubtedly means there will be mistakes. Then some of those people will have to be rehired. But that's an unfortunate consequence, but it's inevitable when you're having to travel at the speed that they are.
That's former US Commerce Secretary Wilbur Ross there speaking to Bloomberg's Kriti Gupta. Other stories that we're following. US Attorney General Pam Bondi has suggested she won't seek an investigation into the Signal group chat that saw Trump administration officials reveal sensitive military plans to a journalist. Bondi says the episode was a mistake, but no classified information was discussed and the mission was successful, making the world safer. Top trade officials from South Korea and Japan are set to meet with their Chinese counterpart in Seoul this weekend as they seek ways to respond to increasing trade pressure from the US. The trade deal is likely to be on the agenda. The meeting comes just days after President Trump announced a 25% tariff on auto imports. The three Asian countries are among those Trump has cited as trade abusers. Prime Minister Mark Carney says Canada will fight back against President Trump's trade war but declined to outline specific actions. Carney says his government will respond based on what the US does next Wednesday, when Trump plans to announce so-called reciprocal tariffs. Canada has already imposed retaliatory levies on over $40 billion worth of US products.
We will fight the US tariffs with retaliatory trade actions of our own that will have maximum impact in the United States and minimum impacts here in Canada. We will protect our workers and our industries during this difficult period.
More ahead on the Asia trade. This is Bloomberg.
Chinese banks in focus in this busy week of earnings. Bank of China has reported a 2.6% in full-year net profit, with net income rising to 237.8 billion yuan for 2024. The lender is warning, though, that the real estate market correction will continue to weigh on the bank's asset quality this year. Bloomberg Intelligence expects margins at China's biggest lenders to further narrow in the year. Joining us now from Hong Kong is Grace Wu, who's a Senior Director and Head of Greater China Bank Earnings at Fitch Ratings. Grace, always great to have you with us. So how much is the pressure going to be for Chinese lenders, given that we still see that drag from the property sector?
Yeah, I think, well, aside from asset quality pressure, really the main thing that's pressuring profitability this year is the net interest margins. You still have some of the lagged impact from last year's reductions in interest rates, as well as the reduced mortgage rates, which will fully kick in for 2025. And that's exerting a lot of profitability pressures for the Chinese banks this year.
We're seeing seemingly a campaign to try and speed up property NPL disposals this year. Is that going to help balance sheets meaningfully?
Yeah, we still expect quite large-scale NPL resolution. In fact, if we look at the amount of NPL that's been resolved since 2015, that amount is nearly 26 trillion RMB, which is actually equivalent to about 7% of credit, right? So that massive scale of NPL resolution has been one of the underlying reasons why the reported NPL ratios at Chinese banks have been quite flat. That said, we still expect asset quality pressures to remain, but it looks like the peak NPL formation has passed, given that stimulating and supportive policies introduced since September last year has helped to stabilize the property market.
We've also seen banks cutting consumer loan rates to spur demand. Do you see that continuing, and do you expect it to work?
Yeah, we still expect some more rate reductions this year, which is why that will continue to exert pressure on their net interest margins and hence their profitability. But this is precisely why, at the same time, the Chinese government have committed to injecting capital at the major state-owned banks in order to help them maintain stable profitability and internal capital generation, despite these profitability pressures. Whether that will help stimulate consumption, I think that's still too early to conclude. But we are seeing some signs of increase in NPLs relating to consumer loans. Abate is coming off a very low base at the moment.
Yeah, you mentioned that recapitalization plan. How resilient is this going to make China's banks, and what sort of shocks and risks are you anticipating?
Yeah. On average, we expect if the capital injection, assuming an amount of about 1 trillion RMB, that will lift the common equity tier 1 ratio for the Chinese bank by about 1 percentage point. Currently, they're about 12.5%. So that will give them headroom to maintain, just around 12% ratio, even with the profitability pressures. But this is assuming no major increases in credit costs for the rest of the year.
Are we seeing a significant shift when it comes to more interest now in wealth management products, and how does that play out for the broader business?
We have seen some growth in wealth management products last year, especially because, to counter some of that margin pressure, banks will also be lowering deposit rates to safeguard their margins. So for depositors, wealth management products is an alternative to help protect their wealth. So we still expect to see some growth in wealth management products, but we probably would not see the kind of stellar, very high double-digit growth that we have observed in prior years because of clampdown on these activities since 2017. We expect some growth in terms of the overall balance, but relative to GDP, we still expect it to maintain around 23% of GDP, which is the balance at the end of 2024.
Where are you seeing when it comes to the level of demand for corporate loan growth and that sort of broader appetite, particularly with the kind of refocusing on the private sector rejuvenation for China?
We've certainly seen some fairly robust growth in sectors like green energy, the newer industry, the manufacturing sector, and also microfinancing, for example. These are the target growth areas for Chinese banks as they scale down some of the property-related lending. The property development loans remains quite flattish, and while we expect the banks to support some of the refinancing, we don't necessarily expect very high overall loan growth. Again, the capital injection at the banks is very much targeted at sustaining stable capitalization and profitability, not so much aimed at stimulating loan growth in our view.
Grace, always great to have you with us. Grace Wu, who's a Senior Director and Head of Greater China Bank Ratings at Fitch Ratings. Let's take a look at some of the corporate stories today now. And Bloomberg has learnt that Hong Kong developer New World is seeking an additional loan of $2 billion. The company has proposed using one of its most valuable assets, Victoria Dockside, as collateral for a 3-year loan. New World is still in discussions on 2 other potential loans in a bid to refinance borrowing set to mature this year and beyond. China's largest offshore oil and gas driller has posted higher annual earnings and boosted its dividend as growth in energy output offset weaker prices. CNOOC's net income rose to $19 billion as output expanded to 727 million barrels of oil equivalent. The company says it will stick to its 3-year output targets through 2027. Tianxi Copper has reported full-year earnings that narrowly missed estimates. The Chinese metal giant says results were boosted by strong copper prices last year, but were affected by its loss-making refining business. It expects copper prices to remain strong due to tight supply, but warns of market volatility next year driven by US trade policies.
We're just waiting on the summary of opinions from the Bank of Japan. They're expected any moment now. Just ahead of that, we're seeing the yen losing a little bit of ground there, or gaining a little bit of ground. 150.83 at the moment versus the greenback. We saw a bit of movement earlier when Tokyo CPI numbers for March came out. They were a narrow beat, gaining by 2.4%. The expectation there was for a 2.2% rise. So signs that inflation is still pretty strong in Tokyo. Well, still waiting on those. We'll come back to that in a minute. Coming up, though, the Hong Kong Rugby Sevens returns, putting the city's brand new $4 billion stadium to the test. We'll take you live there for a preview next. This is Bloomberg. Hong Kong's shiny, brand new $4 billion stadium is going to be put to its first big sporting test this weekend. Rugby fans from across the world expected to fill up the 50,000-seat venue as the beloved Sevens tournament returns to the city. China correspondent Min Min Lo is at the new Kai Tak Stadium. So, Min Min, how's the mood there?
Hey, we're a couple of hours away from the start of the first match, but behind me you can see some kids playing. Those are the local junior leagues, giving them a chance to play at this big stadium. But you can feel a bit of a nervous energy in the air this morning. People running around, checking on everything, because this is the first big test for this venue's readiness to host such an event as big as the Hong Kong Sevens, which is the crown jewel of the World Rugby Sevens circuit. You have sports fans from around the world descending in Hong Kong, and it's not just a sports event, right? It's also, in some ways, a business networking event, because it's strategically planned to cap a busy week in the financial calendar. There was the Milken Symposium, there was the HSBC Investment Summit, there was the Bloomberg Family Office Conference as well. So a bit of a release of a pressure valve at the end of the week, where business professionals, families and sports fans mingled together. And as you said, the government spent $4 billion to build this massive sports park. Taxpayers will be wondering, is it worth all that money? It's a bid by the Hong Kong government to reclaim Hong Kong's status as that premier destination for mega events after Hong Kong lost out to Singapore in luring the likes of Taylor Swift and Lady Gaga. It's also meant to bring in more tourists after we saw an exodus of expats after the pandemic and after the imposition of the national security law as well.
So what are some of the features of this new stadium that are supposed to be compelling enough to be able to do that, Min Min?
Yeah, I think fans will be most excited to find out what will happen to the South Stand, which is the iconic heart of the party, where sometimes you get random sprays of liquids, mysterious liquids and beers coming on you. And the designers actually tried to recreate that South Stand down to the concrete entranceways and the number of seats here. Of course, the backdrop is very different. Instead of an open air place surrounded by green hills, here you have the glass panels that's supposed to overlook that panoramic view of the harbour and the skyline. Although it's a very foggy day today, so you don't see anything through those glass panels. The next event hosted here is the Coldplay concert, and so that turf you see behind me, that's actually going to be shipped across the border to Shenzhen for storage. It's shipped from a dedicated farm from Zhuhai for this adaptable pitch, and you can imagine the cost of maintaining such a multi-purpose stadium is also not that cheap as well.
Our China correspondent Min Min Lo there. Let's take a look at what we're watching when it comes to the yen. As Paul mentioned a little bit earlier, we did see a little bit of a move into the yen, but still, ultimately, we are still looking at these levels that continue into a third week of weakness there for the yen. At the moment, we are seeing levels at, over the past 2 days, we're down about 0.2%. Seemingly looking past sort of that Tokyo inflation beat there, we are getting these Bank of Japan minute lines. The downside risk from the US economy are rising rapidly, and there needs to be caution on rates if the economy is hit. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens, and if the sort of the guidance is going to tell us what we're going to get from the US, carrying through to Asia, and again, US futures also showing that uncertainty. It does look like that sort of directionless trade for Friday, doesn't it?
It does a bit. One thing that's showing very solid direction is the gold price, which is benefiting very well from all of this uncertainty. But as for other assets, it's really a mixed bag right now.
Yeah, even with the solid US eco data, the GDP data, the corporate profits numbers overnight, it's clear that investors are very much focused on next week's April 2nd tariff announcements, these reciprocal tariffs that could be announced. We could get more details, and certainly that is still the narrative when it comes to even what we're hearing from global central banks, right, in terms of the minutes from this Bank of Japan Japan meeting, really talking about global uncertainty. The downside risks arising from the US are rising rapidly. The need to be cautious when it comes to the rate trajectory if the economy is hit. It's interesting, one member saying that uncertainty doesn't always mean to just stay on hold, and that the BOJ may have to make bold calls depending on the situation. They do still have high policy flexibility, so some of that commentary and sort of colour coming around through, given that we have had, you know, an unexpected overshoot or a quickening when it comes to Tokyo inflation. That's boosted the yen on these BOJ bets as well. But certainly it is the sort of overlay of global US uncertainty that continues to play out. That uncertainty is being played out when it comes to the markets at the moment. Take a look at the start of trading when it comes to Japanese stocks. Nikkei 225 and the Topix both off by about 1.25%. That 25% car tariff potentially adding to the risk in terms of what the BOJ is battling at the moment. It's not exactly expected to derail growth or dampen inflation prospects, but it certainly is sort of one extra complication when it comes to their decision making, with the BOJ still expected to take 2 more 25 basis point hikes this year to take that target rate to 1%. But those US headwinds very much at play there. Dollar yen retreating a little bit from that 150 handle after we had that Tokyo inflation number, as well as some of these BOJ BOJ, I should say, commentary that's coming through at the moment. But still a little bit of a knee-jerk lower, perhaps doesn't kind of get maintained, but the dollar will be back possibly on that upward trend as traders kind of start to potentially have a bit of doubt over the timing of the Bank of Japan rate hike there. Let's take a look at Korea as well, because of course this is another market alongside Japan that's seen to be the biggest in terms of being impacted by these auto tariffs. The Kospi is off by about 1% there. The KOSDAQ doing a little bit better, but still firmly in negative territory, Paul.
Let's take a look at how we're tracking for yields as well. The 10-year, well, it slipped a little, now pretty much unchanged, because we heard from a couple of Fed speakers as well. Susan Collins saying it's inevitable that tariffs are going to cause inflation. Thomas Barkin also noting instability caused by tariffs at the moment, but no change there on the 10-year right now. We've been trading here in Australia for just a shade over an hour. A little bit of weakness on the ASX. We're off by 1/10%. We did, of course, get an election date a little bit earlier. Australia's going to go to the polls on May the 3rd, and a very tight race that is shaping up to be. In terms of market action, we do have a few sectors in the green. Materials are performing pretty well, and among them, gold miners performing especially well. We did get a new call from Goldman Sachs on gold a little bit earlier, now 3,300 an ounce by year end. If you put that in Aussie dollars, 5,200. So Australian gold miners having a pretty good morning so far. All right, let's get to our next guest. Kaanhari Singh is head of Asia Cross Asset Strategy at Barclays. Kaanhari, I just want to start by getting a sense of what your view on these markets are at the moment. The word of the year so far is uncertainty. I'm wondering what sort of moves you're anticipating on April the 2nd, which President Trump is describing as Liberation Day, and how you're hedging against unknown announcements.
Yeah, morning both, and thank you very much for having me on. Look, you said it. I think going into next quarter and April 2nd especially, the main driver of markets is really going to be tariffs. And when we think about tariffs heading into next week, it helps to take a quick step back to look at and recognize that for the last 3 months, it was really meant to be this environment, a slam dunk for the US dollar. And consensus positioning coming into 2025 was very much that way as well. Markets were long dollars, long US equities versus rest of the world, paid US rates and received rates in Europe. And very painfully so, none of that has really worked out. And for a couple of reasons here, we think, right? First, outside of China, the US trade spat has been somewhat concentrated towards the allies so far. And that is really denting US business confidence. US fiscal prospects are also deteriorating a touch here, and the fiscal impulse drag on growth could be marginally negative. Overall, the US administration's policy on rest of the world are really almost forcing other countries into very large, non-linear reaction functions. If it wasn't for the Munich conference, Europe would have probably not rallied as hard and as fast behind the fiscal spending agenda. And, U.S.'s tech policy, since the Biden era really, is forcing China into fast-tracking its semi-self-sufficiency drive. So what does this really all mean heading into the next quarter? Look, we think markets are still underpricing risks towards announced tariffs, especially in the FX markets. And that's not even counting for what could come on April 2nd in terms of reciprocal tariffs. We look at the portion of FX returns since last October, which is unexplained by interest rate differentials, as a proxy for trade premiums in the major pairs. CAD is pricing in a 6% tariff premium, Euro 4%. But more interestingly for us in the region here, dollar CNY is pricing in very little. And theoretically, on the 20% new tariffs that are already announced, dollar CNY should be at least 10% higher. So we do have, going into this quarter, a long dollar bias, especially against cyclical currencies. And we are positioning for a U.S. growth slowdown, which does, after a very long time, give us a net short bias in global equities.
Yeah, just your points on U.S. equities as well. We do have a chart that illustrates what you're saying there. If we compare the S&P to the Hang Seng Index, I mean, the S&P is down 3.2%. We've got the Hang Seng having a terrific year so far, up about 17%. How long do you see this outperformance continuing, and what's really driving it here? Because, I mean, China's got its share of structural problems, but right now, just looking stable and predictable, is that enough to appeal to investors?
Yeah, absolutely. Look, China for us is becoming really a tale of two narratives in a way. The AI story is very positive, for sure, both on the build-out and on the adoption. And as you said, that's reflected in equity prices year to date. But consumption and property in China still account for 70% of GDP. And there are some signs of stabilization there, but it's still very early days. And that momentum has to sustain further for us to have stronger comfort that those segments are really bottoming. So when we think about green shoots from a markets perspective, and especially the AI impact on quantifying that to GDP growth, there's many different ways of cutting it. But just to simplify it, the first channel would be through sentiment, which can manifest itself in many ways in the economy. But one of those would be positive wealth effects for households. But the second more tangible impact of AI is really through R&D spending. And, we know in China's 2025 budget, they announced 400 billion RMB for science and technology spend. Typically, given historical multipliers in China, that implies that GDP growth for this year could get a boost of 0.5 percentage points. But the issue is that's exactly half of what 20% new tariffs on China actually take away from growth for this year. That doesn't mean, though, even if the AI impact on the economy is broadly muted for this year at least, that doesn't mean that equities can't keep rallying. The valuation gap versus S&P has narrowed, very much like European equities. But as long as China can keep delivering on earnings and the authorities will step up fiscal stimulus in the face of tariffs, this market can keep performing.
And for Europe, you are still worried about that beta to the US, despite the outperformance that we've seen there too.
Yeah, absolutely. I think it's about, what kind of growth regime are we really heading into? When we look at the impulse of growth and inflation on the U.S. side on EM equities, of course, EM equities do the best in a Goldilocks kind of setup, which we are very far from. The market has currently been pricing somewhere between a U.S. stagnation to potentially a U.S. stagflation for the next quarter. Look, if U.S. CPI were to stay sticky or even go higher from here because of tariff impact, that's a pretty difficult setup for EM equities and especially for China. But to the extent that market doesn't trade stagflation, EM equities and China can continue outperforming the U.S., even if U.S. is selling off.
When you talk about wanting to be overweight global fixed income versus equities at the moment, where are you seeing that opportunity, particularly in the Asian region?
Yeah, absolutely. For us, that's really more of a DM trade. We like forward curve steepness in the U.S. In Asia, actually, the only market globally in DM where we don't like receiving duration, it's in Japan. As you mentioned in the segment early on, Japan is really going through its own cross currents between tariffs, which are a headwind to growth, and very strong domestic inflationary impulse, which should allow the BOJ to continue normalizing policy rate. And, the market has come a very long way in the first quarter in terms of pricing in BOJ's terminal rate going from 85 bips to 120 now. And that's substantiated by everything we've heard on the Shunter wage negotiations. Overall, the first tally came in at 5.5%, which is already an increase on last year's 5.3, which was a record high. So there's a lot going on in Japan, which gives us comfort that, Japan is seeing this kind of healthy cycle between wages and price pressures, which will broaden out into the economy. So in Japan, we are actually paid rates. We do see a move down in dollar-yen to 142 kind of level. We think there is room for the market to continue to reprice terminal rates higher towards 175 or so. But we think it will be a slow grind higher, so we're also happy to be short rate small there.
And Kaanhari, before we let you go, I want to get your view on gold, which a lot of investors don't like it because it doesn't pay you anything. But if we take a look at this chart on the Bloomberg terminal, we can see that it's outperformed pretty much everything this year. Goldman Sachs just lifting its price target there to 3,300 an ounce. What's your approach to this asset?
Yeah, we've been fairly positive on gold as well, and there are many structural drivers here that are helping gold. And the most important of it, really, for us is this consistent sort of bid that you've had in the market from EM central banks diversifying their FX reserves, especially China, which we think will probably continue. And on a short-term basis, in terms of how the price action for cross-asset markets has been in Q1, we are pricing in growth fears right now in the U.S., but not so much in the rest of the world. As we previously discussed, inflation could prove to be sticky or even start trending higher in the U.S. And in this sort of a setup, gold is one of our preferred hedges, and we think it continues grinding higher.
Kaanhari Singh, head of Asia Cross Asset Strategy at Barclays, and continues to grind higher. It does spot gold rising to a record now on these mounting trade war fears. The widening trade war, the growing haven demand is continuing to build there, and gold on track for a fourth weekly gain. We're seeing so much of that support from central bank buying as well as investor demand for that haven play there as well. We've heard from several major banks, including Goldman, revising up their price targets for gold. Some are seeing it reach 3,300 an ounce by the end of this year. Will be very interesting to see how that plays out with the fresh wave of trade levies, I should say, to come on April 2nd as well. Coming up on the Asia trade, Australia's Prime Minister calling a May 3rd election with price and housing pressures set to dominate the campaign. We get these details next. Plus, we'll be speaking with the Hong Kong China Rugby CEO James Farndon as the city's beloved Sevens tournament kicks off in a brand new stadium. This is Bloomberg. Australian Prime Minister Anthony Albanese has called an election for May 3rd, kicking off a campaign expected to focus on cost of living pressures and a housing crisis in a sluggish economy.
Our government has chosen to face global challenges the Australian way. Now, on the 3rd of May, you choose the way forward. Your vote has never been more important, and your choice has never been more clear. This election is a choice between Labor's plan to keep building or Peter Dutton's promise.
Our Australia government reporter Ben Westcott is in Canberra and joins us now. So Ben, finally, starter's gun fired. Anthony Albanese sitting on a very narrow poll lead and a very narrow majority in the House as well. Can he hold on? Can he win?
Yeah, this is the big question. Usually Australian governments come to power with very large majorities, as much as 90 seats to 50 or something like that. But because of the dynamics of the Australian electorate at the moment, with a bigger share of the vote going to third parties, Anthony Albanese won with one of the most narrow majorities in Australian history. And so given that, he has only a few seats to play with before being plunged into minority government and being forced to negotiate with minor parties and independent lawmakers to hold on to power. Now, there is a wide consensus, given the close polling, that Anthony Albanese will be forced into minority government if things continue as they are. But there is certainly no sign that the Labor side has given up on majority government, although given the voter backlash against cost of living concerns, it can be a little hard to see how they're going to get there.
So, last election was all about the Teals. It sounds like the independents will be as powerful as ever, or perhaps more significant this time around.
Yes, absolutely. If the country heads into minority government, then the Teals will likely have a major say in who will be the next Prime Minister of Australia, potentially being the keymakers themselves. It's going to be interesting to see how many of them actually hold their seats, however. We had polling overnight which showed that in the Victorian seat of Goldstein, potentially there might be a win for the Liberal Party there. But even if a few of them lost their seats, there would still be a large Teal crossbench that could, in the end, decide whether Anthony Albanese or Peter Dutton is our next Prime Minister.
Australia government reporter Ben Westcott there. Well, that cost of living crisis also an issue in Japan, with rising prices in Tokyo slightly faster than expected this month, keeping the Bank of Japan on track for gradual interest rate hikes. Our senior editor Brian Fowler joins us now for more out of Tokyo. And, the picture is quite similar when you strip out energy and volatile food costs as well. What are the implications for the Bank of Japan? Obviously, on the one hand, it keeps them on the trajectory as expected. On the other, we've been talking a lot about, how households are struggling to keep up with inflation.
Yeah, so Heidi, I think these data definitely add a lot of excitement to the next policy board meeting. They come against the backdrop of a few positive domestic developments. The union wage negotiation results from Rengo came out better than expected, and you'll remember that was a big factor a year ago in the BOJ's decision to hike rates for the first time in 17 years. 3 weeks from today, we're going to get the national CPI for March. Those figures will show that inflation has been at or above the BOJ's target for a full 3 years. So there's definitely going to be a rationale to go ahead with rate hikes on May 1st. Having said that, of course, the BOJ has been very cautious about what's to come from the U.S. in terms of trade policies and the impacts. We saw that this morning in the summary of opinions from the March meeting. And we still don't know exactly what's going to happen in early April with the reciprocal tariffs. But the auto tariffs came out just a little bit more broad than we thought they'd be with the extension to auto parts. So there's also reason to be cautious. So I think the bottom line is we will hear from Ueda sometime in the next few weeks when he speaks before the upper house to deliver his semi-annual report. At that time, I would expect him to signal pretty clearly one way or the other, because the last thing he wants to do is surprise the market. So that's going to be something to watch very closely.
Yeah, and in respect of the tariffs question, we did hear from one government minister in Japan today saying it's regrettable that Japan has been included. But is there any way out of this for Japan's automakers? Because President Trump's shown a little sign of carving out exemptions at this stage.
Yeah, Paul, it's a little bit surprising because Japan really put in a lot of effort to say the right things. They made personal trips to Washington to talk about all the investment that Japan's going to make into the U.S., which is exactly what the Trump administration wanted to hear. And yet Japan has not won an exemption. Prime Minister Ishiba is talking about the possibility of some kind of move in retaliation, but I think they're also really focused on what they can do to support industries here while they wait this out. Japan continues to press for some kind of exemption from autos and maybe something a light load on the reciprocal tariffs, but it doesn't look like it's going to happen.
All right, Bloomberg senior editor Brian Fowler there. We're more ahead on the Asia trade. This is Bloomberg.
We are hearing from Radio Canada from, in fact, the Canadian Finance Minister, Francois-Philippe Champagne, saying that President Trump and Mark Carney are set to speak on Friday. And it's interesting because, of course, we have heard from Prime Minister Mark Carney saying that Canada will respond to Trump's trade war and tariffs on the auto sector, but they won't be outlining what those new retaliatory moves will be until April 2nd. There's already, of course, retaliatory tariffs on around 60 billion Canadian on US products, with threatening more as well. So very, very closely following how that conversation goes if it does come through, Paul.
Well, UBS Asia Pacific President Iqbal Khan sees stagflation as the biggest risk for investors. He spoke to us at the Bloomberg Family Office Summit in Hong Kong about why he's not expecting a recession in the US despite rising trade risks.
The biggest risk for everybody is to sort of like have this perspective of hope, right? I think everybody needs to focus on the fundamentals. Even if you look at the U.S. economy, you mentioned there is a slowdown in growth. In a number of the fundamentals, you're not seeing that to the extent that you might read in the media. If you look at some of the portfolio companies,
it was the OECD that cut its growth projection. It wasn't the media.
Global growth projection. I'm not arguing with you around is global growth higher or lower. Also, the reduction was not that significant. The biggest question, if you think about risk, I don't think it's a risk question of how much growth we will have or not. It's stagflation. That's the real risk out there. And that's what everybody wants to avoid. And I think most of the central banks, including the Fed, is clearly very, very focused on that.
Do you see a recession in the U.S., given multiple tariffs that we're looking at, given the expectations of a trade war? Prior to the 25% tariffs on autos, there was a chance of, I think, 35 to 40% of a recession in the U.S. Summer says 50. How are you looking at the possibility of that happening?
Look, I think we're not seeing that as of right now. Have risks gone up in terms of having a slower economy? Yes. Equally, if we look at this whole, everybody keeps on coming back to the tariffs, right? I mean, most of these tariffs have actually been short-lived, with the exception of specific tariffs and the reciprocal tariff that's been announced. And let's see how long some of these more significant tariffs are going to actually prevail and exist. If you look at what happened earlier on this year around specific high-level tariffs, you saw them being taken away post-negotiations and conversations. At the end of the day, the question will be how do tariffs really impact the economy, and what level of tariffs impact the economy? If the objective globally, and I'm not specifying onto the U.S. administration, but globally is to actually have a world where you are at the same level playing field and the product makes the difference. If that is, and assuming that is the objective, but if that is really the objective, then this will be a transition period. And this transition period brings uncertainty. That uncertainty has an impact on volatility in markets.
That was the UBS Asia Pacific President Iqbal Khan there, speaking with our Bloomberg Insight anchor Haslinda Amin. More ahead on the Asia trade. This is Bloomberg.
Let's take a quick look at how Asia markets are tracking at the moment. Some weakness there in Japan and South Korea as well. Both major indexes down. It's car makers again, which is seeing a fair bit of selling. We've got Toyota off by 4.5%. Hyundai, meanwhile, off by another 3.3%. The ASX, however, flat. It's really the materials sector propping things up at the moment. Gold miners having a very good day, Heidi.
We'll take a look at all of the geopolitical sort of crises that are playing out, right? The US is pushing to control all major future infrastructure and mineral investments in Ukraine. According to a draft partnership deal seen by Bloomberg, the Trump administration is demanding first claim on investments in infrastructure, energy and critical minerals. Bloomberg's Jill Desis joins us now from Hong. So, Jill, what are the implications of this?
Well, really, at this point, Heidi, it seems that this is kind of coming out of, first of all, Ukraine and President Zelensky's desire to sort of draw in some of the Ukraine's allies to, help and invest sort of in infrastructure, and then ultimately, sort of challenge Putin and Russia. However, when it comes to this particular agreement or this particular situation that we're reporting on that the U.S. is putting forth, is essentially it seems like it's a way for President Donald Trump to kind of get back, all of the money that the U.S. has been putting toward Ukraine's efforts to fight Russia during this war in Ukraine. Effectively, it would create this investment vehicle where the U.S. would kind of take some of those initial profits and then use that to sort of pay back some of that military aid. If not all of that military aid that the U.S. has really been providing Ukraine since 2022, whether this actually is something that goes forward, I think kind of remains to be seen, because it does kind of put the U.S. in a position, or would put the U.S. in a position where it would have some pretty, commanding control over how a lot of investments in sorts of energy infrastructure are actually being conducted in Ukraine. But it does kind of indicate there, all of that, sort of that big push that the U.S. is kind of putting forward to, that the Trump administration is pushing forward, to kind of seize this narrative and sort of take control of some of these initiatives in Ukraine as it pushes more aggressively, as the Trump administration pushes more aggressively for a quicker end to the war.
Jill, in terms of an end to the war, we have heard from Russian President Vladimir Putin as well, proposing a UN-led transitional administration in Ukraine. I mean, when we put this alongside some of the other demands that Vladimir Putin has made in respect of peace, how realistic is this one?
I mean, look, Paul, you're really looking at, I think, that tension kind of playing out and how a lot of these, arguments are taking place here. I mean, from the U.S. side, at least, Putin saying in that statement, that the U.S. is, kind of acknowledging the U.S. is pushing forward into this war. Of course, the Trump administration hasn't really made a whole lot of demands from the Russian side in terms of concessions, certainly not in this extent that they have for Ukraine. Of course, when you're putting this, though, sort of in context with what the EU is kind of pushing for here. I mean, Russia wants an end, to a lot of sanctions that Europe has sort of put on Russia. The EU is not at this point willing to kind of back down on some of the sanctions. It does kind of still feel like there's a lot of daylight between a lot of these sides before we ultimately reach a more fulsome conclusion to this war.
In the meantime, of course, domestically, we're still seeing the Trump administration really trying to move past the Signal chat debacle, right? We're hearing from the Attorney General that there's no intention to pursue any kind of investigation or probe.
Yes, that's right, Heidi. I mean, I think that at this point, it's pretty clear that the rest of the Trump administration is very aligned, sort of on how they're trying to move past this particular instance. You've got the Attorney General, Pam Bondi, saying that she doesn't really think that there's, she doesn't see a need to actually investigate this as a breach of security. She's saying that ultimately, while that was sensitive information that was contained within these messages, nothing in there was sort of overtly classified. I mean, that's, obviously that statement coming from the Attorney General's office there. But again, this is something that it's now been 4 days since that article in The Atlantic came out, sort of detailing these messages, how these officials were using, the Signal platform rather than, these sort of government-approved, trusted channels of communication to talk about these types of, these types of efforts. Whether they're going to be able to successfully sort of push back that narrative, I think, we'll have to actually see whether that's something that they can do.
And Berg's Geodesic there across all of those top stories. Take a look at some of the other headlines that we're tracking this hour. And Elon Musk says he plans to stash $1 trillion in government spending by the end of May. The billionaire running President Trump's so-called Department of Government Efficiency told Fox News that he's confident that the savings won't affect critical government services. The DOGE website so far lists about $22 billion in contract savings, while claiming $130 billion in unspecified cost reductions.
They may characterize it as shooting from the hip, but it is anything but that. Which is not to say that we don't make mistakes. If we were to approach this with the standard of making no mistakes at all, that would be like saying someone in baseball's got to bat 1,000. That's impossible. So when we do make mistakes, we correct them quickly, and we move on.
U.S. Secretary of State Marco Rubio says the Trump administration has so far revoked over 300 visas as it pushes to expel foreign citizens who protested against Israel. Among them are several international students who expressed support for Palestine. Their lawyers say the actions violate constitutional rights to free speech and due process.
Maybe more. It might be more than 300 at this point. We do it every day. Every time I find one of these lunatics, I take away their visa.
You're saying it could be more than 300
sure,
visas?
I hope. At some point, I hope we run out because we've gotten rid of all of them. But we're looking every day.
One of China's top leaders is calling for increased global cooperation and opposition to protectionist measures. Vice Premier Deng Xiaoxiang made the comments at the annual Boao Forum. Chief North Asia correspondent Stephen Engel's there and joins us now. So, Stephen, the Boao Forum are wrapping up. Have the delegates there managed to put together any sort of playbook for dealing with all the tariffs and uncertainty?
Well, I think they're in the discussion stage, no doubt. We've had so many panels here at the Boao Forum for Asia, and many of them, most of them, dominated the discussion with tariffs because, again, there's so much uncertainty, especially ahead of what the U.S. is calling Liberation Day on, April 2nd next week. Well, at least the Donald Trump administration is calling that. Stephen Roach, who was a guest on this program yesterday, likened it more to ground zero. So however your political take is on it, it is being discussed here ad nauseum. And, we heard from Deng Xiaoxiang, the number 6 standing committee member, the 6th most powerful leader in China, speak yesterday, calling for increased global cooperation and also condemning the protectionist sentiment that is coming from parts of the world. No doubt a veiled threat about the United States' actions. Again, this is what he said. No matter how the external environment changes, China will open wider to the world. And that is music to the ears of many of the business leaders gathered here, as well as over this past weekend at the China Development Forum, as well as later today when Xi Jinping is likely to meet with a bunch of multinational leaders in Beijing, multinational executives, I should say, in Beijing. And also, the Pakistani finance minister was here. We spoke to him yesterday. He talked about, of course, on the one hand, considering or issuing a panda bond, but also needing to talk to other players around the world in light of these tariffs. This is what he had to say.
Of course, U.S. is our largest trading partner, is the largest export destination for us from Pakistan. But at the same time, we are also building our regional corridors. So in terms of our increased trade with GCC, with Turkey, and going forward with the Central Asian republics. So I do think while the global trade may not be a driver of growth in the short term, but these regional corridors are going to become very, very important.
So you mentioned this meeting with multinational CEOs, and we've been sort of following Tim Cook's visit to China as well, right? Very interesting, given he's gone to the hometown of DeepSeek and the such. Do we know who President Xi will be meeting with on Friday and what these conversations might entail?
It's been a fairly tightly guarded secret who's going to be there. There's been a number of different jockeying of panel participants here at BOAO. Whether that's to return to Beijing early, we simply don't know. Other news media have reported that the heads of Mercedes and BMW, as well as the Qualcomm CEO, would be in that meeting. We haven't confirmed that yet. We do have reporters at the Great Hall of the People, where we expect the meetings to potentially happen later this morning. So we'll keep you abreast. But clearly, this is part of Xi Jinping's charm offensive, and that is a term that has been used many times here. It seems as though the leadership here realizes they have an opening to court other nations, not just rely so much on the United States for trade. Keep in mind, the foreign direct investment had its biggest fall into China last year in 3 decades. So he clearly wants to charm money to come back into China. He's also, of course, shoring up support in the once battered down private sector here in China with that meeting with, obviously, the Jack Ma and others last month. Now he's meeting with foreign executives. And also keep in mind as well, I talked about openings geopolitically. Also this weekend, for the first time in 5 years, you're going to have the trade ministers and the industry heads of China, South Korea, and Japan meeting in Seoul to talk about how they together can potentially weather these Trump tariffs.
Bloomberg Chief North Asia correspondent Stephen Angle there. Coming up, well, Hong Kong's iconic Sevens tournament returns on a brand new $4.1 billion stage. We'll get a preview next with the Hong Kong China Rugby CEO James Farndon. This is Bloomberg. Hong Kong's beloved Rugby Sevens returns on a brand new stage, the Kai Tak Stadium. The 50,000-seat venue is a showpiece of the city's shiny new $4.1 billion sports park, and it is one of the many ways that the financial hub is trying to boost international tourism and revive the city's economy. Our China correspondent Min Min Lo joins us now live from the new stadium.
Hey Heidi, yes, this is the first time that the Hong Kong Sevens is going to be hosted at this Kai Tak Stadium. After more than a year's delay, it's finally ready, and as you said, the first test for this event and this venue's readiness to host such a large-scale event, a bid by the Hong Kong government to bring in more tourists and to reclaim Hong Kong's status as the premier destination for these international mega events. And I have with me here the CEO of Hong Kong China Rugby to share with us some insights. James, thank you for being with us. So first of all, a lot of anticipation about whether this new stadium can replicate the sort of electric atmosphere that we got in previous years. Yeah. What's the mood going to be like here?
Yeah, thanks for the invite. Really pleased to be here, and it's fantastic, isn't it? When you look at the stadium, it's been a journey. So all the trimmings that you see at the end now are the end of that journey. But what are 3 days we're going to have? But we've had test events. We've had a number of occasions where our event operations team are getting accustomed with the stadium. It's all about really bringing, for our fans, what the best of the old stadium at So Kom Po into now this state-of-the-art stadium at Kai Tak, which you see all of the technological advancements. It's a stadium that's state-of-the-art and made specifically for Sevens rugby. So all the changing facilities, all the medical facilities are really state-of-the-art. And obviously the entertainment experience is going to be a wow factor as well, given we've got the fan village, the Champions Bar over the other side of the stadium, just a lot more wider entertainment experience for our fans, which is the main thing, because the fans make the atmosphere, right?
Yeah, and you got one of Asia's longest bar opposite there, right?
Absolutely.
And I understand organizers were saying they're expecting a record turnout, 139,000 people coming over these 3 days. Yeah. Do you have a breakdown in terms of how many of them are foreign visitors or mainland China visitors, and how does it compare to previous years?
Yeah, well, I mean, as you know, we've always taken huge pride in the fact that the event's been running for so many years, and we've always had a high influx of overseas fans and visitors. That's what we're about. It's an iconic bucket list, jewel in the crown event for us within the Sevens series. I guess historically, pre-pandemic, we probably looked around 50% of our visitors were overseas. We dropped, obviously, during the pandemic. Post-pandemic, we got back to around 30%. But one of the other upsides of during and post-pandemic was we attracted a lot more local visitors. So now, coming into Kai Tak, we're in a really great place where if we supplement the increase in overseas visitors, but also build on the local visitors that we had, local fans that we had during that time, we're going to be a really, really healthy place.
Okay, and the Hong Kong government has spent $4 billion to build this massive sports park. So taxpayers will be wondering, is it worth the investment?
Yeah.
How much revenue do you think this will generate?
Yeah, I won't disclose the exact figures. Obviously, you can disclose that after the event. But needless to say, I mean, look at the stadium, the ticket sales at the moment. We're really, really pleased with. We're getting historic. I guess most of the Sevens series tournaments have a late spike in ticket sales. We've really seen in the last couple of months our tickets really accelerate in terms of sales at 3-day and single day. I guess as an organisation, we're just keen that we get back to a healthy point where our revenue and our accounts would be healthy on the back of Kai Tak. But I guess I always try to remind people that we're non-for-profit, so we reinvest much of, if not all of our revenue back into the game.
Yeah.
So we reinvest through various different channels in domestic rugby, community rugby, charitable causes. We've got our own Rugby for Good charity, as well as support the domestic game here as well. So that's really important for us.
Okay, and you stepped in as CEO mid last year.
Yeah.
What is your vision for Hong Kong China rugby and the growth of this sport in Hong Kong and China?
Yeah, I mean, the rugby community actually, regardless of myself, I mean, Robbie McRobbie, who was my predecessor, worked for the union for many years, and similar vision really, that we want to continue what we do so well across participation in the game. Hong Kong's a very unique rugby community and a very special one. In the minis right through to seniors, we've got a huge amount of clubs and a huge amount of players playing across all age groups, across education as well, in schools and universities. My vision would be for us to continue that, give a pathway into senior rugby, and we also need to think about the reach and the resonance of our sport, because not all players want to play contact rugby and the what you see, but we have other forms like touch rugby, which really entices people to play the game. I mean, the tournament itself, it's not just for rugby fans, right? It's a huge entertainment opportunity, but it's a huge opportunity for us to promote the sport to young people. And part of our vision is around social impact. We want to have social impact across Hong Kong community and wider, and also create role models that can inspire the little
next generation of rugby players.
Exactly. So that's so important.
Yeah. Thank you so much, James Farndon. That was the CEO of Hong Kong China Rugby. Heidi and Paul.
All right, thanks, Min Min. That's our China correspondent, Min Min Lo, there with Hong Kong China Rugby CEO James Farndon. Well, Hong Kong Financial Secretary Paul Chan says the city's economy is steadily marching forward. He also told Bloomberg's Family Office Summit the financial hub is seeking to expand the Shenzhen Hong Kong Stock Connect beyond the Greater Bay Area.
So if you guys have got a question. Our ambition is to extend this kind of connect arrangements beyond Greater Bay Area. Say, for example, in China, Shanghai also very prosperous, high income. People also want to have certain asset allocation offshore. So why not? At the moment, in this stock market, the connect scheme is between Hong Kong, Shenzhen, and Hong Kong, Shanghai. Yeah.
I mean, we're here to talk about family offices and obviously the priorities of the government in terms of the progress report, where we are, and what you guys want to achieve. Well, give us the state of affairs. How are things? Give us an update of what you've seen so far, and are you happy with what you've seen so far?
Well, the economy is growing steadily. Property market stabilizing, stock market doing very well. Unemployment rate is low. Inflation rate also very low. So overall speaking, I think we are marching forward steadily. And at the same time, the mainland economy is also stable, growing steadily, which is also a positive factor for us. We expect the stock market will continue to be very vibrant. In terms of IPOs, there are over 100 major companies on the pipeline waiting to be listed. We are also working very hard to promote cross-boundary capital flow. In addition to the connect arrangements with the mainland, the possibility of enhancing two-way capital flows between Hong Kong and the emerging markets like the Middle East.
I forget where I read this over the weekend, that Hong Kong doesn't rank very high in terms of happiness. And I'm wondering, and I'm cognizant I'm asking this for a room full of financial professionals and the financial secretary. I mean, do we work too hard in Hong Kong? Like, you know, how do we sell the lifestyle if it seems as if we're just chasing our tails?
Yeah, we do work very hard. And also, we went through some challenging years, as you may know. Particularly this week, wonderful week. We have an array of arts, sports, culture, F&B. So work hard and play hard.
The Hong Kong Financial Secretary Paul Chan there speaking to Bloomberg's David Inglis. You can get an insider's guide to the money and the people shaking up the financial hub in our Hong Kong edition newsletter that's out every Thursday. You can sign up via bloomberg.com/newsletters. This is Bloomberg. A look at some of the top corporate stories we're tracking at the moment, and Bloomberg has learned that Hong Kong developer New World is seeking an additional loan of $2 billion. The company has proposed using one of its most valuable assets, Victoria Dockside, as collateral for the 3-year loan. New World is still in discussions on 2 other potential loans in a bid to refinance borrowing set to mature this year and beyond. China's largest offshore oil and gas driller has posted higher annual earnings and boosted its dividend as growth in energy output offset weaker prices. CNOOC's net income rose to $19 billion as output expanded to 727 million barrels of oil equivalent. The company says it will stick to its 3-year output targets through to 2027. Jiangxi Copper has reported full-year earnings that narrowly missed estimates. The Chinese metal giant says results were boosted by strong copper prices last year, but were affected by its loss-making refining business. It expects copper prices to remain strong due to tight supply, but warns of market volatility next year, driven by US trade policies.
All right, let's take a look at how futures are shaping up at the moment. We've got US futures just turning modestly positive. It was, of course, another day of weakness in the US, particularly for automakers. We have both Ford and General Motors sinking following those tariff announcements. Looking ahead to the open in China and Taiwan in a little more than 30 minutes' time, we're seeing a little bit of positivity for Chinese futures. Keep an eye on CNOOC, among other stocks. The CNOOC reporting full-year results that missed estimates. This is largely due to a greater than expected impairment loss for its foreign assets. Let's take a look at how some of the other benchmarks that are open in the Asia Pacific are tracking at the moment. Seeing a bit of a mixed bag, really, a bit of weakness in Japan and South Korea as well. Car makers again suffering the brunt of the selling. Although it's a reasonable day here in Australia, it's the materials sector that is leading the way, and gold miners in particular. And if we take a look at commodities in that respect, we've got gold surging to another record. Goldman Sachs lifting its price target for gold for the end of the year to $3,300 an ounce. Heidi.
Yeah, the sort of geopolitical overlay, the uncertainty of tariffs continue to drive gold higher into that haven demand. But that is it from the Asia trade. Our markets coverage continues. We're looking ahead to the start of trading in Hong Kong, Shanghai and Shenzhen. This is Bloomberg.